Okay, let's unpack this. Specifically for income-focused investors like you. We're diving deep into a specific investment vehicle that's been generating a lot of buzz, the YieldMax MSTR Option Income Strategy ETF, known by its ticker MS2Y.
MSTY, right.
You sent us a stack of documents on this one, overview materials, research snippets, a fact sheet giving us, well, a ton of material to work with here.
Absolutely. And our mission in this deep dive is really to slice through that stack, pull out the most important nuggets and insights these documents offer.
Yeah, what really matters.
Exactly. And help you understand what MSTY is, precisely how it aims to generate income according to these materials, and critically, what risks were flagged that you absolutely need to be aware of, all based only on what you provided.
It's clearly a product designed with that income seeker in mind, isn't it?
Yeah.
So understanding the specific mechanics and the trade-offs presented in these documents is key. Let's jump in. What exactly is MSTY, and how do the sources describe its underlying strategy?
Well, the documents state MSTY launched pretty recently, actually,
Okay.
February 22, 2024. Its stated main purpose is quite straightforward, aiming to generate monthly income for investors.
Simple goal. But the strategy is anything but straightforward, right? It doesn't actually hold shares of MicroStrategy, MSTR, the company it's named after. The materials highlight it uses a synthetic covered call strategy focused on MSTR. What does that even mean?
Right, that's a core mechanic explained in the documents. It's key. Instead of owning the MSTR stock directly, the fund builds exposure to MSTR's stock price using options contracts, things like buying call options and selling put options.
Okay.
The materials explain this effectively mimics owning the underlying stock, which they term the synthetic long exposure.
Okay, so it feels like it owns the stock, but through options. Got it. Then how does that translate into income? That's the big question.
That's the covered call piece. So once it had that synthetic long position, the fund then sells call options on MSTR.
Sells calls, okay.
And the documents detail these are typically written with strike prices slightly above the current MSTR share price, usually between 0% and 15% higher, and they have short expirations, often 1 month or less.
Right. Short term.
The crucial part for income is that by selling these options, the fund collects premiums. That's the primary source of the monthly income distribution.
Okay. Premiums from selling those calls. And the materials also mention it holds U.S. Treasuries. What's their role?
Yes, those are held mainly as collateral against the options positions. They need something backing those trades. And they also contribute a bit of additional income through interest payments, a secondary source, really.
So putting it together, the documents showed the strategy can allow for potentially very high monthly distributions. That's the headline for income investors, right?
Yeah, that's the hook, definitely.
But there's a really significant trade-off spelled out because of selling those calls. The materials make it clear this strategy limits potential participation in gains if MSTR stock price goes up significantly.
That's the crucial risk explicitly flagged. Your upside participation in a big MSTR rally is capped by the strike price of those sold calls.
So you give up some potential big wins.
You give up some of that potential gain in exchange for the income premium now. However, and this is important, the documents also unequivocally state that the fund remains fully exposed to potential losses if MSTR's stock price falls. Full downside risk.
Oof. Okay, so capped upside, full downside. And because it's all tied to MSTR and its options, the materials note it's non-diversified, highly concentrated in instruments related to just that one company.
Exactly. Very concentrated. When you look at what's actually inside the fund, based on the documents, it's primarily those MSTR options contracts and U.S. Treasuries.
Yeah, the fact sheet you included really hammered this home, showing it has just 10 holdings with, what was it, 99.99% of assets concentrated in those top 10?
It truly underscores that focus, and it's important to note, the documents point out, because it doesn't hold MSTR stock directly, MSTY shareholders aren't entitled to any dividends MSTR itself might ever pay out.
Right, if MSTR ever started paying dividends.
Correct. The income comes purely from the options premiums and the treasury yields we discussed. That's it.
All right, let's talk about the numbers presented in the sources, because this is where it gets fascinating, especially for income investors. The performance figures mentioned are as of May 30th, 2025. What did they show?
Right. As of that date, the documents show the year-to-date return was roughly 19.64%. Pretty strong.
Okay. And the 1 year?
The one-year return was cited at approximately 85.33% in one document. Although it's worth noting that another source you sent, ETFDB, mentioned a slightly lower number, around 79.99%.
A bit of a difference.
Yeah, they suggest this might be due to varying calculation methods or maybe slightly different end dates being used. but still, very high returns reported for that period.
Still, incredibly strong performance since the fund launched, but the documents correctly highlight its very short history, less than 2 years old, right? Meaning there are no 3 or 5 year performance figures to evaluate yet.
Exactly. Very new fund. And the number that will likely grab the attention of any income investor reviewing these sources is the trailing 12-month distribution yield.
Ah, yes, the yield.
The documents state it's an eye-popping approximately 139.7%.
Wow, 139%.
Yeah, that's based on an annual distribution figure cited at $30.25 per share relative to a price around $21.66 at the time of the report.
That's huge. And the table in the documents shows examples of recent monthly payouts. May 8, 2025 was 2.37304 TAS, April 10, 2025 was 1.3356 cents, and March 13, 2025 was 1.3775 TAS.
Yeah.
That's a pretty wide range month to month, though.
It is, and that variation is tied to something absolutely crucial the documents emphasize about that high yield. This is where it gets really interesting and frankly critical for understanding this product.
Okay.
While the yield figure is exceptionally high, the documents are very explicit that the high yield may include return of capital.
Return of capital.
Okay, let's dig into that. For our income-focused listeners, the concept of return of capital ROC can be a bit counterintuitive, maybe even concerning. How do the documents explain this in the context of MSTY?
Well, the sources explain that ROC can happen when the distribution paid out is actually greater than the net income generated by the fund's activities, like the options premiums or treasury interest earned.
So it's paying out more than it technically made in that period.
Potentially, yes. Think of it this way. Instead of the entire payment being profit or income earned by the fund, a portion of it might be essentially returning the investor's own initial investment principal back to them.
Giving you your own money back, basically.
That's one way to think about it. And the documents point out a key consequence of this. It can reduce the fund's net asset value, or NAV, over time. The actual value of your holding could shrink.
So you're getting cash distributed to you, which looks like income, but some of that cash isn't newly generated wealth. It's potentially shrinking the value of the underlying fund itself. That feels problematic if you're not aware of it. It's definitely something the documents flag as needing attention. And to make this point really concrete, one of the documents provided a striking example. It wasn't MSTY itself, but a related YieldMax ETF, ticker YieldMax.
Okay, a sibling fund.
Kind of. It showed a recent distribution YieldMax made on May 2, 2025, where, get this, 73.04% of the payout was characterized as return of capital. Only about 27% was actual income.
Wow, over 70% was ROC in that example.
Yeah. And this example from the sources strongly suggests that MSTY's distributions could follow a similar pattern, where a large portion isn't necessarily income in the traditional sense, but rather ROC.
That example is a powerful illustration of the point. The documents rightly emphasize the importance of reviewing the fund's actual distribution characterization reports, especially because ROC can have different tax implications than qualified dividends or other types of income. You need to know what you're getting.
Absolutely critical for tax planning.
Right.
And as we saw with those recent monthly figures for MSTY, the distribution amount itself isn't stable. It fluctuates significantly month to month.
Which brings us neatly to the significant risks that the documents spend considerable time detailing. For any income investor looking at that huge yield, understanding these risks, as outlined in the materials, is absolutely paramount.
Couldn't agree more. You have to look beyond the yield number.
So what are the key dangers highlighted in these documents?
Okay, first and foremost, single issuer risk. We've touched on this. This fund is almost entirely tied to MSTR's performance.
MicroStrategy.
Right. And the documents are clear. MSTR's stock price is heavily influenced by the price of Bitcoin, given MicroStrategy's massive holdings of Bitcoin on its balance sheet.
Ah, the Bitcoin connection.
Very important.
Hugely important. This makes MSTY inherently much more volatile than a diversified fund. You're taking on concentrated risk tied to MSTR and, indirectly, very much tied to Bitcoin's swings.
So you're getting concentrated exposure heavily linked to the ups and downs of Bitcoin, but filtered through this specific option strategy. Precisely. Then there's price participation risk, which we touched on earlier when explaining the strategy. The documents reiterate the capped upside potential if MSTR stock has a huge rally.
Right, you miss some gains.
Compared to the fact that you bear the full exposure to declines, you benefit from some upside, sure, but the mechanism limits how much, while the downside risk is fully present. No buffer there.
And tied directly to that eye-catching yield is distribution risk. Seems obvious, but what did the docs say?
Yes, The materials state there's absolutely no guarantee of monthly distributions. They can vary wildly, as we saw. And the sustainability of such a high yield is explicitly questioned by some analysts cited in the documents,
Especially if Bitcoin tanks.
particularly in a scenario where Bitcoin, and therefore MSTR, enters a bear market. It becomes much harder, maybe impossible, to generate those large options premiums consistently at that level if the underlying is falling hard.
That makes intuitive sense. If the underlying asset tanks, getting income from selling calls against it gets tough.
Very tough. Another risk flagged is simply new fund risk. With less than 2 years of history, the documents acknowledge there isn't a long track record.
We don't know how it behaves long term.
Right. We can't assess its stability or performance robustness over different market cycles yet, especially given its linkage to a notoriously volatile asset like Bitcoin.
And because it relies so heavily on options, there's also derivatives risk, I assume?
Correct. The documents mention this introduces complexities like counterparty risk, the small possibility that the other side of the options contract doesn't fulfill their obligation.
Someone defaults.
Yeah. And also liquidity risk, the potential challenge of easily buying or selling the specific options contracts the fund needs at favorable prices, especially during stressed market conditions.
Okay. And finally, given the MSTR Bitcoin connection, there's technology and cryptocurrency risk.
Yep. The materials highlight that the fund's performance is inherently linked to the volatile and sometimes unpredictable cryptocurrency market. And that market itself faces unique risks, like regulatory changes, technological shifts, security breaches, even market manipulation concerns.
Okay, those are substantial risks clearly laid out in the documents. Any income investor needs to seriously weigh those against that yield. Let's briefly touch on the fees and the context provided in the sources before we wrap up.
Sure. The documents state the expense ratio is 0.99%.
Nearly 1%. How does that stack up?
Well, for context, the materials note this is definitely higher than many passive index ETFs, which isn't surprising. This is an actively managed fund employing a complex options strategy.
More moving parts.
Exactly. They also place it roughly in the middle quintile among similar peer funds using active option strategies, according to analysis mentioned in the sources. So not the cheapest, not the most expensive in its specific category.
And it's helpful to see where MSTY fits within the broader YieldMax family structure outlined in the materials. It's not alone, right?
No, it's part of a whole suite of ETFs that use this similar synthetic covered call strategy, but target different underlying single stocks. The documents gave examples like NVDY for NVIDIA, 2NY for Coinbase, or TSLY for Tesla.
So they apply the same engine to different stocks. And the document suggests that if an investor were interested in this type of strategy, but maybe wanted some diversification across multiple such positions,
Right, instead of just betting on MSTR.
they might look at the YieldMax YMax or YMAG ETFs mentioned, which essentially hold a basket of these single stock funds, according to the sources.
Yeah, a useful piece of context from the materials for those exploring this whole category of high-yield options ETFs.
Okay. So bringing it all together, based purely on the documents you shared, what does this all mean for you, the income-focused investor, reviewing these materials?
No.
How should you think about MSTY?
Synthesizing the information provided, MSTY certainly offers a potentially very high distribution yield. And the performance numbers since its launch, as reported in the docs, have been quite strong. No denying that.
And it's a big but.
A very big but. The documents are quite direct about who this product is likely suited for. Income-focused investors who are specifically comfortable with high risk and significant volatility, particularly the volatility tied to MSTR and, by extension, Bitcoin. This is not for the faint of heart.
You're kidding. You absolutely have to weigh that attractive yield and recent performance, as presented in the documents, against the equally significant risks clearly detailed that capped upside, the potential for return of capital eroding the fund's value over time, the extreme reliance on a single, highly volatile asset influenced by Bitcoin, and, of course, the lack of a long track record.
It seems the core message from these documents isn't just about the high percentage yield number itself, but truly understanding how that yield is generated and the significant trade-offs involved that are outlined. It's complex.
It really is. It's not just get high income.
Absolutely. And the documents strongly recommend, as is standard practice for any fund like this, that investors should always review the fund's full prospectus thoroughly, read the fine print, and consult with a financial advisor to ensure any investment, especially one with this risk profile, aligns with your specific goals and tolerance for risk.
Good advice. So we've taken a deep dive into MSTY based entirely on the stack of documents you shared with us. We've peeled back the layers on its unique synthetic covered call strategy, highlighted its concentrated holdings tied to MSTR and Treasuries, looked at its performance since launching, examined that potentially very high yield, and importantly, detailed the specific risks the materials emphasized.
Including that crucial point about potential return of capital and distributions and the capped upside.
Right. This really underscores that generating potentially high income with strategies like this often comes with significant complexities and trade-offs that demand careful review, especially for serious income investors.
Which really raises an important question, I think. Given the potential for very high yield and recent strong performance reported in the documents, but also considering all the significant risks flagged the capped upside, the potential for distributions to include return of capital, which could erode the principal over time, how do you personally evaluate the sustainability and the true total return potential of an investment like this over the long term? How do you look beyond just that enticing headline yield figure?
That's a great question. Definitely something significant to think about as you continue exploring income strategies. Thanks for sharing your sources with us for this deep dive.